Good morning, everybody. Good morning. We'll get started in just a minute. As usual. Okay. All right. I have a travel day today, so I'm going to be heading to the airport here in just a little bit. Luckily, today is a day we basically just have to wait for the news to kind of come out in the afternoon and then markets to react to it. So it's about as good a day as I can think of for travel, as far as that's concerned at least. So we'll get started here in just a minute. Actually, it's pretty much time to get started here. All right. We'll just wait another 30 seconds and then we'll get started. Obviously, a lot of earnings today, kicking off Starbucks and F5 Networks are a couple of stocks that we're going to be watching very closely today. We had our morning call internally here just a few minutes ago, and we'll be keeping T.S. Leong. What's the question? What about travel? I'm not quite understanding the question. Oh, the picture in the background? I think that's Hawaii. No, that has nothing to do with. That's just an Apple background that they provide. No. I'm in Florida. I'm flying to Switzerland today. All right, so let's get started, everyone. Good morning. We have a few things to go through this morning. I want to go through some earnings. We're going to be some post-earnings reactions we're going to watch today. I do want to have a look at Chinese stocks, Alibaba, K-Web. Those things are moving, and I think could be interesting. And then I want to point out Nvidia in terms of what happened yesterday. I think an interesting dynamic there, and again something we're going to see a lot more of this year. Now, first, just to quickly get started on the big picture. Obviously, we have the Fed today, 2 o'clock Fed statement Eastern, 2:30 Eastern. We get the press conference, and then that pretty much goes through the rest of the day. And then we have earnings right after that. So it's sort of like a double whammy. What I think is really interesting here as it relates to the bond market, let's look at 10-year yields quickly to give you some perspective. So if the Fed were to go on hold, this is a bit of a different perspective than I think what people are thinking of. I still think that bond yields could go higher, but we could see not necessarily today. That's not the call for today. But what we could see is I could envision a scenario where the Fed pauses today, is maybe a little bit cryptic in terms of further rate hikes, rate cuts, or even rate hikes, and just kind of doesn't give them much. But if they just pause, it is plausible to think that rates kind of stabilize here between, 4.5 and 4 3/4-ish. And the reason I say that is because if they don't hike much more from here, if they're not talking about lowering rates, then that should take some inflationary pressure fears out of the market. And so bond yields could then maybe not collapse from here, but kind of remain range bound, which would be, a lack of a headwind for equities. In other words, the bond market then would be in a situation where, again, 4.5 to or even 4.4, something like that in some sort of a range. So let me repeat this. So if the Fed is going to be talking less dovish, basically, less about cutting rates, then the inflation fears, which we've seen pick up, inflation expectations have been going up, should come down, which would then be less of a headwind. That part of it would then be potentially less of a headwind in the near term for equities. So in other words, we have to look for something else then, which might be then more earnings related, and whatever might come out of the White House, we don't know yet. Tariffs are still on the table, and they've kind of started slow on that. So I think some people are getting a bit complacent, but I think we're starting to see more volatility come out of the White House, which is to be expected, right? We all know this. That's kind of the playbook, but we just haven't seen it yet. That doesn't mean it's not going to happen, of course. That's kind of the fallacy in the analysis. So that's one thing, one way of looking at it. And so we'll be watching this very closely. From a trading perspective today, for me, I'm traveling, as I said, all day today, so there's really not much trading I'm going to do. I'm not going to be in the chat room either, unfortunately, today. It might, if I can, poke in my head here and there, but for the most part, I'll be traveling. But there are earnings to watch, and I think there's things setting up. So first of all, let's look at what happened yesterday. And this is something that I think is going to be very much in the cards. I'll bring up this chart here for this year. So we talk about more volatility. We talk about more of a trader's market this year. That's why I keep calling it the year of the trader. And that means we're going to see momentum moves, but it also means we're going to see things basically bottom out very quickly and then bounce or rally very sharply and come down, right? We saw that in Boeing, the latter version of this intraday, and we saw it in Nvidia on the downside, and then going back up. So if you have the vertical X Pro indicator, which is our extreme overbought oversold indicator, intraday yesterday in the 5-minute chart, what happened is the stock had a pretty sharp drop at the open once again, then give us an oversold signal, and the stock then rallied almost exactly 10% for the rest of the day, right? I mean, that's one hell of a way to put on a trade. Imagine having bought a call or a call spread or sold a put spread or whatever one would have done, or buying some double Nvidia ETF or something crazy that people do. That all is viable at that point, right? So what I'm trying to show you, there's a lot of opportunity. And I unfortunately didn't see this signal because I had a meeting until 10:30. By the time I saw it at 10:30 Eastern time, it was just a bit too late for me to get in at that point, but it continued to work for the rest of the day. So there's going to be a lot of that stuff happening this year. And I think today could be one of those days where we see some of that happening maybe after the Fed. But again, it's going to be probably more prevalent Thursday, Friday as we digest the Fed and we get earnings, post-earnings moves. Meta, Microsoft, and Tesla, I think, is reporting today after the close. So I'll be watching those very closely. In terms of more specifically trades, so we added, if you are a Market Rover member, we added the shares of Alibaba, BABA, to our active watch list about 2 weeks ago, I'm going to say. In the meantime, that stock has moved into a new bullish trend, and it is now actually, it also fired off a new T signal, which is a swing trade to the upside. It's already reached its targets 1 and 2. BABA is a fast mover. However, I do think there's actually potentially a lot more to go there. So what you could see, and a lot of this is going to be depending on what the dollar does. That's why the dollar is so important to watch. But if you have a look at KWEB, which is the Chinese internet ETF, run by my friend Brendan over at Crane Shares, and we've got interviews by him, by the way, on our podcast channel. You can go watch those about the bull case. This is what the Crane Shares KWEB ETF looks like here. This is purely a technical thing, right? But I think you can kind of see the bull case here, just purely from a technical perspective. There's a lot more to it. Again, the Market Rover gives us a lot more context by actually having a bullish trend and giving us a bullish momentum. So on Alibaba, the question, of course, is how much higher can this stuff go? I mean, honestly, it's up to anyone's interpretation, but I think levels to watch if this continues would be for KWEB, specifically around 34. So those are those recent highs, and then after that you have to go all the way back to probably the October highs in the high 30s. So, that's what's possible there. Does that happen without a hiccup? No, but what you're going to get a lot of clues from if this is going to work is from the dollar. I think if you see the dollar, come under a bit more pressure, so if this were to be an ABC corrective wave, then the whole tailwinds for Alibaba and the Chinese stocks, whether it's through the FXI ETF or the KWEB ETF, could be very supportive for that. So that's the way I'm kind of looking at it, and I think that's, again, it's a valid trade already, but just keep in mind these things are volatile. I mean, Alibaba yesterday, just to give you some perspective, moved, how much is that in one day? Yesterday's move was 6.7%. So since it became a bullish trend on January 17th, this thing is up, 12, almost 13%. So just keep in mind, these things are very volatile. But I think this is interesting, especially if you were to see some capital come out of the U.S. markets, if the dollar were to go down, which I do think is possible, not necessarily today, tomorrow, or even this month, this quarter, but I think it's something that has a high likelihood of happening at some point this year. So we're going to watch this very closely for that reason. The other two things I want to watch is two stocks that have reported earnings over the past, basically last night after the close. And so those two stocks are Starbucks and FFIV, which stands for F5 Networks, is the company. So first, let's start with Starbucks. Now, Starbucks has a new CEO, and everything was off to the races when that new CEO was announced back in August, and the stock has really not looked back since. It's acting very well technically. It's pre-market up again. I think it's pre-market above like 104. So technically, this is a very interesting move. What our game plan is here for Starbucks is to potentially look for an options credit spread, like a bull put spread, but I want to see how the stock acts today. And the reason I say that is because we actually want to do a trade on Boeing yesterday, but we want to wait how the stock reacts intraday. And sure enough, the stock ended up falling from peak to the close by about almost 6%. So we don't want that to be the case for Starbucks. So I like the idea here. There are some fundamental concerns with Starbucks. Sales growth was actually the same. I think 4% sales growth is what I saw the company had, which is about the same as their price hikes were. So that basically means no sales growth, right? Sorry, not sales growth, average ticket growth. So average purchase growth. So when you go to Starbucks, their average ticket order value went up by like 4%, which is the same as the actual increase in price. So apparently they had no sales growth. So that's concerning, and we'll see if analysts or investors catch on to that, and if they think it matters. But that's one thing we're watching. If you want to be technical about this is actually very interesting. So this is something called a Fibonacci extension opportunity here. I'm going to quickly grab my Fibonacci thingy, which is here. Such a pain in the ass finding these things. Here. If you take the lows from July and move it up to the highs, you can see we retraced exactly 50%. And that would mean that the stock has a target at 110. It's called a 23.6% Fibonacci extension. It's one of my favorite extensions. In fact, it's probably one of my favorite trade setups, to be honest with you. I haven't really talked about that much, but we'll teach you guys that one at some point this year. So you'd have a profit target around 110. So if the stock holds in there today and it has a good day, and for all I know, the stock will reach that target today. That's certainly not my base case, but it could happen. But if it has a nice day today, then I think the stock could go to 110. And then the other one is FFIV. This is almost the opposite. This is a stock that's now gone vertical, and obviously there's a growth story, but the stock is up, I think, another 10% pre-market. So it might get to a point where it gets overbought and then starts to consolidate. So let me quickly show you what that one looks pre-market. So that's FFIV. It is up. Yeah, there you go. It's up, whatever that is, up about 14% pre-market, so 309 is the number on that stock. I think there's a potential situation where it gets overbought by the vertical X Pro indicator. So 309 is what that stock looks to be opening at this morning if it opens where it's at right now, which is highly likely. So that's about here. That would, to me, mean the stock's going to get overbought. I might put on a bear call spread if we have a valid setup with the vertical X Pro. So those are some of the things that I'm watching this morning, folks. I'm going to get ready now for the airport. I'll be in the trade ops chat room when I got a chance. But again, it's a day today where everyone's going to be on hold, waiting for the Fed, and then waiting for those earnings after the close. That does not mean there's no opportunity. I just gave you a whole bunch of them, things that we're going to be watching very closely. But hope this is helpful, folks. Please do subscribe to the channel. Very important, so that you get alerted in real time when we go live. It allows us to be able to continue to do this show. Give us a thumbs up, and I will see you members in the trade ops chat room, and I'll see all of you guys back here tomorrow morning when we'll be chiming in for tomorrow's session. A lot to digest tomorrow morning for sure, and a trade plan. See you guys soon, and I'll see you in the chat room.